good afternoon, Rwanda. It's great to be with you virtually. I'll do it in Rwanda again next year. I promise we'll come because we'd love to. It's a real privilege to be hosting this panel debate with you this afternoon. And I'm delighted to be joined by a really fantastic, dynamic panel with me. I'll just briefly say that my name is Louisa Waddingham and I work at REAL. I'm the head of operations for Africa. And REAL is an innovator and an investor in affordable housing. And I'm now going to invite my dynamic colleagues to introduce themselves. They represent different parts of the ecosystem involved in housing finance and housing delivery. So I'll just quickly go around my room that I'm seeing on my screen. Immediately to my right is Sumaida. Hello, Sumaida.
Hi. Hello, everyone. Hello, everyone. It's such a pleasure to be here. Quickly, just to add to what Louisa said, low-income households across the globe are typically on the fringe of financial inclusion. And this is because there's limited qualification, there's lack of educational skills and a background. But if we actually one single factor which cumulatively impacts other factors is the lack of access to finance. And that is what we aim to address and deliver with our marquee product. It's a digital platform which empowers lenders to lend to the performing customers and bridge this gap into the financial ecosystem. Thank you.
Sumaida, I'm not certain about everybody else, but you're breaking up a little bit for me. I don't know if that was the case for James and Prosper as well, but don't worry, we're going to come back and there'll be lots of opportunity for you to say exactly what you just said again, as we get the text sorted out. So I'm just going to ask James and then Prosper to briefly introduce themselves. I'll do a little bit of scene setting, which I think is what Sumaida was just doing for us. And then we'll dive into the conversation about the earners of informal incomes and what we need to better understand. So let's just go straight to James first. Just who you are, James, and what Fusion Capital does.
Yeah, thanks, Lan. Thanks, everyone. I'm having a bit of internet problems as well, which is a standard problem, obviously. But yeah, my name's James McLean. I'm the director of real estate at Fusion Capital. And Fusion is we're a mid-cap private equity firm and developer, and we are focused on East Africa, sector agnostic, but at the moment going heavily into affordable rentals and low-income rentals. So yeah, looking forward to discussing with you all today.
Super, thanks, James. And I'm pleased to invite Prosper, last but not least, Prosper from Absa Bank Ghana.
My name is Prosper Akoto. I work with Absa Bank Ghana Limited. My name is Prosper Akoto. I work with Absa Bank Ghana Limited as the head of retail lending and credit card. We finance houses for all sort of income earners, lower, medium, and high income earners as well. We finance affordable housing, medium housing, and also high-end housing projects for our customers. Thank you.
Super. Well, I hope as an audience you understand and you've got all of our designations and where we sit in the affordable housing ecosystem. What we're going to be doing this afternoon now is a conversation, really, as we unpack why we need to better understand the income potential and the income earnings of people in the informal sector. I mean, as we all know, the informal sector makes up pretty much the backbone of Africa's economy. And as a group with informal income and irregular income, they find it very difficult to access housing finance. And therefore, the housing supply isn't meeting their needs. And actually, that's an issue for the informal sector in particular and low income earners more generally. And with rapid population growth, urbanization, these numbers are rising all the time and we're all struggling to keep on top of them. So it's vitally important that we understand what the incomes are of people who are in these segments, particularly the informal sector, both the incomes and probably the expenditure patterns as well, because a depth of understanding is expected, and we all believe will enable us to open up housing finance for people more broadly. So that's the big sort of scene, and I know everybody who's on this conference knows it very, very well, and probably better than me. So I'm not going to get into that. But I'm interested to just go around my room and just ask the panelists, you know, what are your organisations doing now to actually engage with this massive demand, both of the the low incomes and the informal sector specifically. And Prosper, if you don't mind, I'd like to sort of throw that to you first in ABSA. What is ABSA Bank doing to really try and cater for this big demand for affordable housing finance in Ghana and perhaps across the region, if you can talk to that?
Thank you very much, Louisa. So in ABSA, we try as much as possible to understand what the problem is in these sectors that you highlighted, the informal sector and as well medium to low income sectors, to identify what the problems are and provide solutions to these people. We realize the challenge in these sectors has to do with property costs and also equity contribution, and as well as most people in these sectors have over-leveraged in terms of borrowing in other areas. So they don't actually qualify to actually purchase even an affordable house. So what is ABSA doing for these people? We are collaborating with estate developers. We are also collaborating with government and also green investors and development funds across the world to ensure that we are able to provide affordable housing to minimize the cost of these properties to the medium to low income earners and as well as the informal sector people. We also try to back our mortgages with pension funds. What that does is that customers will not have the challenge or the problem of contributing their equity towards the purchase of the house. The bank can now finance 100% of the total cost. And so that burden is taken off the medium to low income workers as well.
That's
and also
great.
the
Thank
fact
you,
that
Prosper, if it's okay, we'll come back to ABSA, because I know you've got lots to contribute, but I just thought let's just ask Fusion perhaps to come in on that, because I think it's quite interesting. I recognize you're in Ghana and Fusion's in Kenya, but the context is, similar across the region. Fusion, how are you engaging with this housing demand? You're just on mute, James. Sorry.
Yeah, thanks, guys. I'm sorry about my internet. I think it's sorted. If I get cut off, I'm really sorry. Yeah, I mean, so as far as the informal sector, we were actually thrown this challenge by our board 4 or 5 years ago. We were told, I think everyone agrees that there's this huge demand supply mismatch when it comes to low income housing. We classify low income as individuals or families on less than $500 a month, which for our market, so for Kenya, that's about 74% of the employed population. And we estimate, but we're going to talk about data, we estimate about 85 to 90% of the informal population. And yeah, we looked at it and, we really wanted to target that market. I think once it was thrown to us, we looked at about 30 to 40 deals, developing real estate for that market, build to sell. But the reality we came to from every single project we looked at, and I hope we're going to cover this in the meeting today, is even if you can build a house for $15,000, if you're selling that house to someone who has $15,000, they're not a low-income individual. They're firmly middle class when it comes to Kenya, for sure. And then the second part, the bit I think we're going to talk about, is in order to allow that build and sell model to work, you have to have offtake financing sorted. And offtake financing, we know there are 35,000 mortgages in Kenya. That's just not enough. Again, they go to wealthy people. And because and we've tried to do it ourselves, right? We've tried to fix that sector by doing tenant purchase schemes. But without the information for an individual that tracks, and I really hope that Samita is going to talk about this, without being able to track and put together a profile for an individual, it's very hard to be able to even bring them into a tenant purchase scheme, because it's not a no-cost prospect. So, I mean, what we're doing at the moment, just quickly on Fusion, is we focus solely on rentals. We've picked our price and our affordability factor, and we're just delivering units into that price range and collecting as much data as possible from our tenants. We literally track them through online payment systems to get to the point where hopefully we can bring them into the ownership, into owning property, but we're not there yet. So we're focusing. So what Fusion is doing is we're going to fix and focus the rent on the rental market, try and professionalize it, make it safer. It's really unsafe. Make it a safe market, with the view that if we can make that work and other people focus on hacking, analyzing individuals who aren't banked formally, then we can move our renters into that market. So, sorry, that's quite a broad answer, but I think it's all areas we're going to be discussing throughout this session.
Sorry, no, thank you, James. I think you touched on a lot of things that we want to get back to during the course of this conversation, and you've cued in Sumeda very well. Sumeda, we'd love to hear about the experience, because of course you're in India, in South Asia, where there's already, there's been quite a bit of innovation in the sector, and there's innovation happening in Africa as well, as we know. It's really interesting to hear the perspectives that you bring and what you've been able to do as Syntellect in India and across the region.
Sure. So thanks, James. Thanks, Prosper. It's really interesting to hear insights from you. So essentially, just to take off on what James said, even in the Indian subcontinent, if I look at a figure as late as 2018, 80.9% of our workforce is in the informal sector. Now that's a staggeringly colossal, huge part of the economy. And you can't have them outside. And one of the things we realized is that, and I come from a background, I was working with one of the largest lenders first, and I realized that the reason lenders struggle with the affordable housing customer is because these are data invisible. So the lender says, I know nothing about you. I don't understand you. And how do I trust you? And it really comes on, Louisa, to the trust. Because when lenders trust, they lend. And how do they trust? They trust because of credit scores, because of documentation, because of backgrounds. So we said, okay, we dealt with a lot of these lenders. We dealt with the affordable housing customer. And we said, we need to create something which makes you talk to each other. So we said, why don't we empower the lenders with a platform which gives you a 3D understanding of the customer? So if I am selling tea, in a small little town, I need to tell the lender that I work 7 days a week, that I work 12 hours a day. I'm in the main highway, so I have motorists coming up and down, and I have my spouse who looks after the little tea outfit when I'm not there. So we actually created a digital user interface for lenders to work with. The idea being we had to create a digital data identity of the customer. Because once we did that, the lenders started trusting. Because a data narrative started building up, and they started getting data footprints. Oh, okay, so a vegetable vendor typically works at this time. This is what he or she does. This is what they sell. And essentially, all of us on the call, and I'm sure Prosper, being a lender, would agree with me, is lending is a data game. So if we're empowering the lenders with data, we're making them more comfortable, and they will lend. And that's our idea.
That's great. So let's just pass that straight back to Prosper, representing the banking sector. How do you respond to that, Prosper? Prosper, can you hear me? Okay. Hello.
Yeah. So in ABSA, we're developing framework to solution this category of customers, to provide them with support. Not all of them could qualify anyway, because there are certain requirements that may be placed on them, but a lot of them need some level of education to be able to meet the minimum requirement to benefit from the housing project as well. So what in ABSA, what we're doing is to educate our clients in these sectors to bring them up to speed. Some of them, they divert funds into personal use, and those things affect their financials as well. So they first need to bank their sales proceeds, and so that we can do proper assessment of their cash flows as well, and also to keep proper credit records as well. So we kind of educate the people to improve, so that even if they are operating from the informal sector, they are able to meet a certain minimum benchmark to be able to qualify for credit facilities, and including mortgages as well.
Prosper, and ABSA is sort of looking broadly at the informal sector as well as being an opportunity perhaps in the future. And I know that Prosper and ABSA Bank in particular has been working with Real in Mozambique on a program, a partnership that is looking at some of our Casa Real's clients who are on a tenant purchase scheme with Casa Real. I know you know a little bit about that, and I'm reminded by it because James just now said tenant purchase scheme. I think it's an area where we can dive into. But I just wondered if you'd like to comment about the Casa Real mortgage that we've been able to do.
Yes, absolutely. So even in the government of Ghana, for instance, is looking at opportunities where customers can rent and own their own properties. It's a scheme that ABSA Bank is also participating as one of the leading banks to support this whole idea. So such initiative will be supported by ABSA to ensure that we solution customers in the medium to low income sectors as well.
Okay, thank you. Thanks for that. So James, you said there tenant purchase schemes, and you also said rental. And I think what you're getting at there then is that, there are already, there's already data sets available to us, isn't there, really, that can give us a good indication of the affordability of people on informal income and and low incomes. Can you just talk a little bit about the data you're collecting in Fusion then from your rental database? What does that look like, and how do you think that could perhaps be used more broadly?
Yeah, sure. So I mean, firstly, we'll get on to what the data we're starting to collect. I'll make that very clear. But we've data to be able to make decisions, especially, I mean, we're not lending, right? A bit of background on Fusion, we actually used to be a micro lender, so we've got very good at analyzing people, their bank statements, etc., and actually making investment decisions off the back of those. And now we've tried to bring that into our rental our rental strategy. So we will actually have we will ask for M-Pesa statements when a tenant comes into our building. We will analyze them if possible, because we know that from an M-Pesa statement, you can tell someone's spending habits and their likelihood to be able to sustain rentals. But then what we're trying to do, and it's not our core focus. It's just we've learned from trying to raise money on this for low income housing that data is everything, and data doesn't exist. Everyone knows that. It's been the subject of the last 3 conferences I've spoken on. So one of the things we're trying to do is we are not doing anything special. We're just using a normal tenant management system with all of our assets, which directly tracks how people pay, when they pay. Does this person pay on time? Do they always pay late? Why do they pay late? It auto updates us on our assets, so we know exactly at any point in time who's paid, who hasn't paid. And the idea being that we can pull that, by keeping that data, for us on a micro level, we can then say, okay, this person is a fantastic tenant. we want to get to know them better, we want to put them in a bigger building, or we want to put them into a tenant purchase scheme in the future. We can do that. But if someone gets better at amassing the information, we can feed into it. But I'll be honest, apart from, I mean, FSD Kenya have been fantastic and seem to be grabbing information and making it open source. But we haven't seen the platform yet that we will definitely use. Like, there's no centralized credit rating system. We really hope it's Samida's going to say she's going to fix that for us. But for us, on a micro level, just by having the data on the individual, we can map the likelihood of them paying. We can de-risk yield for our investors. There are loads of things we can do from that data, and hopefully we can feed it into kind of a wider data scheme.
Thanks for that. I think, again, that's sort of another sort of cue back to Sumedha. Perhaps talk a little bit about what we're doing in Kenya and where we're going next.
Sure, thanks. James, the kind of trust you put in us, I almost feel like the Indian cricket team, which is so accountable. So thank you so much. But, Louisa, the point James read is actually so valid. Everybody says data is the new oil. And I really disagree with that, because the fact is data isn't oil. One is, we aren't a scarce commodity. In fact, there is just too much of data now. So which is why you really need domain experts. You need, people like us, Prosper, James, all of us to say which data points are forward-looking, which are predictable, which are quantifiable, and which are scalable. And for that, you need to understand the customer. Because like he said, if you're going to actually digitize data and create a base, you're looking at an average tenure of a mortgage worldwide between 7 to 10 years. Even if it's a 20-year mortgage worldwide, typically 10 years is when you kind of taper it off. So you're basically judging this individual and his or her business and saying that this revenue stream will sustain for 10 years. So that's something we work a lot on. And, like Prosper was saying, that the entire informal customer is a very heterogeneous customer segment. All of them are very unique. Their trades are very unique. Their nuances are very unique. And hence the financial forecasting is really unique. And a lot of times with the customers we deal with, for example, in India, James, they don't even have mobile wallets. So there, our equivalent is a Paytm to an M-Pesa. We don't even have that transaction history to fall back on. So what you do fall back on is understanding of the business. And understanding, is his business and his family forward-looking enough, along with the location insights? Is he catering to a middle income, low income, spatial insights to arrive at a decision? And it's completely doable. It's extremely easy. The only area I think people go wrong is when they underestimate spending time with the affordable housing customer. Because if you don't get his or her challenges right, none of our solutions, not mine, not Prosper's, and not even James from a housing perspective, will work.
Yeah, no, I mean, we firmly believe that, like, we're building our low income stuff on the back of each 45 units has a caretaker who gets to know that person at a personal level. It's the only way we can genuinely figure out whether any kind of we have a rent relief fund in our low income housing. And the only way we could know whether someone is just defaulting or whether they're defaulting for a direct reason is to have that interpersonal relationship. So yeah, no, we completely agree with that. The problem is that is a very, very labor intensive way of doing it. Does anyone know a system at the moment which actually can access M-Pesa and because anyone in our team here at Fusion can look at an M-Pesa statement and can give you a pretty good idea of how strong that individual would be as a tenant. And it's amazing. It's a skill I have not learned myself, but it's everyone seems to be able to do it. I mean, actually, this is kind of to both of you. Prosper, do you feed your banking data into any system that you then think are doing a good job? And Sumedha, do you know of a system that is using M-Pesa effectively? Because I think it is for our market, it's the golden ticket.
Yeah. So if M-Pesa has open application process interfaces, they can feed into Right Profile, and we can easily analyze for you as part of the holistic decision. My understanding is they do have an open infrastructure, so they can be embedded with us. Because we do that here. We embed with a lot of providers to give you a holistic answer.
Okay.
Right, and what would we ask? Would we ask the tenant to sign up and offer their statements
Yes.
as part of our process? Would that be how we could potentially work together?
Yeah, we have to have
So
explicit.
we are able to. So as a bank, we are able to leverage on the mobile telco data also to lend to customers at the micro level. It's something that we are doing, and it's growing. The balance sheet is growing. So I would say that we have some level of experience in lending in that space. The lending here is actually focusing on the mass market, salary, non-salary, formal and informal sector. Anybody who is transacting on that mobile wallet can be assessed to see whether they qualify, and then the amount you qualify for. Now, as you continue to borrow on this platform and you repay within the stated period, then it qualifies you for a bigger amount the next month. So it's a monthly transaction tenor in terms of loan tenor that is offered to the customers, and the amount keep increasing as you continue to conduct yourself well in terms of payment. So it's a huge market also. If you look at the learning we are carrying from this space, you realize that there's huge opportunity there that is untapped into in other markets, which I believe if that is expanded, we can actually improve on the financial inclusion across Africa.
It's interesting, isn't it, that you know these new platforms are beginning obviously to gain traction for the developers and investors like Fusion, and Absa's looking at it as well. And I'm wondering what you all think about. I mean, going back to what Sumeda said earlier about trust. In order to get this to scale beyond the comfort of where we all are at the moment, what do you think has to happen? Do we need a market leader? Do we need governments? Do we need, the informal sector themselves to lobby much harder? Where does that come from? How do you build that trust? To anybody?
I'll have a stab at that. I can start with that.
Go on, then.
Yeah, absolutely.
Sorry, Bosma. I think Sumeda's just going to go.
Yeah.
So you're right. It's a very multi-layered problem, and I don't think there's any single player who has a magic wand. So you need all the stakeholders. So you need a systemic thrust from the government. So to share with you the India story, there is a very strong affordable housing policy in terms of there are subsidy programs, there are identified affordable housing developers, you get an interest rebate, you're identified as an affordable housing customer in the bank lending network, and this is centralized data which is sent to the regulator. So that's the thrust. The second, like James was saying, is we have to move away from manual interaction. It has to be technology. The reason a lot of lenders shy away is because they say the cost of acquisition of this customer is so prohibitive that it just doesn't make, profitable stories. So that's another thing. And the third is, I think banks and us, we do that in India, and hopefully at some point with Prosper and James, we'll collaborate, is we need to all work together. Because together we can run so fast and so far. We'd never be able to do that alone. All of us, all four of us on this call.
Yeah. Prosper, how about trust with Absa, that issue? And where would you see, how do you see trust being built more in the ecosystem from the perspective of a bank? I think we've got a time lag on there.
Yeah, just to add to what Sumeda mentioned, so collaboration is very essential. I think we need so we need to work together. All stakeholders need to come together, including governments, because they control a lot of employees as well. So they need to participate in this space also. to create the necessary framework. We need to green investors as well. We need development funds to also work together because the cost on the estate developers is so heavy, so they are not able to meet the demands in the affordable space. So if we have some kind of green investors coming to space, it will also minimize the impact on the end users as well. Of course, we need fintech as well to also help in data collection and analytics as well, which will help the banks to now expand their appetite to cover this section of people as well, to be able to take higher risk. The bank will then be comfortable because now they can trust the data that they are working with and put together some algorithm to ensure that the proper credit scoring is put in place to assess the client. So I think we need all the stakeholders to come together to be able to impact this sector positively.
Do you think that once those stakeholders come together, we might start seeing the cost of housing finance go down? You know, I mean, whether it's a mortgage or perhaps even if it's, you know, not a mortgage, you know, so even if it's a TPS for that matter. You know, do we think that if there's more information out there and there's more confidence out there, can that be something that can actually lower the cost? Because at the moment, even if you get the mortgage, even if you qualify, potentially, you know, the cost is just too high to afford, and not just mortgages, also in other payment schemes. Will all these measures have impact in that direction, do you think?
May I?
Yeah, go ahead then, because go ahead, Zumaida.
Yeah, I would think so. A lot of the interest rates today are very risk-based driven. They're very driven by the perception of the risk of the consumer segment. So if we are able to show efficiencies by the use of technology, where we bring down the cost of underwriting, the cost of acquiring the application, we're able to work with governments and lenders like APSA to create more conducive policies for getting them in. We'll definitely see cost decrease, and we've seen this. You know, I can say this with confidence because, in India, we have seen the affordable housing rates drop considerably. In fact, to just share with you, every year there are multiple licenses given to only affordable housing companies, which only focus on the underserved informal sector. Because they obviously, they have a profitable balance sheet as well. So it's not just charity. It's a good portfolio, it's a robust portfolio, and it's a competitive portfolio.
Do you agree, James, with that as well?
I'll jump in. I mean, I don't know if it's the same problem in India. I don't know India well enough, but the problem we have in Kenya is that our government are borrowing at such a high rate. The risk-free rate, effective risk-free rate, is so high that actually, I mean, look, if Fusion's done a lot of work on tenant purchase schemes, if someone comes in and gives us debt at 7%, we can lend that to the market at 8.5 or 9 and do the best tenant purchase scheme in the market. We can administer it perfectly. We can make money ourselves. We can empower people. We can get people owning houses, pave the way for the mortgage market. But the reality is, who's going to lend to Fusion at 7% if they can get 11% in a government bond? It's not there. So like we talk about this all the time, and we think we've even hacked how to do it. We think we figured it out. The problem is, without that financing, we're never going to be able to test it. And if we can't test it, we can't prove the track record. If you can't prove the track record, you can't bundle and sell down to institutions. All these things have to come from the interest rate. So at the moment, we're waiting for someone to take a bold step and come in and back, not the government, because yes, the government can do subsidized housing and subsidized mortgages, great, but you have to get the private sector working on that problem, and to do that you need to bring in a rate. So it's maybe slightly different for our market. I don't know if it's the same with Prosper in Ghana. That's the line in.
Yeah, absolutely. Yes, it does in Ghana also. I think it's an area that we can also support our clients. But like I mentioned earlier, we need all the parties to come on board to be able to achieve this. The risk is very huge, especially in the informal sector and the low income earnings sector. So, as a bank, we will not be able to do it all, but we need the support of all stakeholders. We need the government to come on board also because of the cost of risk and also the pricing. The pricing is also a key area that affects this market as well. The interest rates on the individuals as well, which is why you need the green investors, which is why you need the development funds also to support this particular agenda. Then that will minimize the impact on the individual as well, and including the informal sectors.
When you say green investors there, Prosper, can you just expand a little bit on that? Are you seeing green investors coming in to provide on the exit, on the construction, actually putting capital into the system? What can you expand and say more of what you mean there?
So green investors may invest in maybe an SPV, special purpose vehicle, to support the housing finance for the affordable housing initiative. So green investors are the people that may not charge you much in terms of interest. They may charge a fee and give you the fund and then you pay back. So if a government, for instance, set a housing fund, they may attract funding from across the world for such investors to invest in the scheme so that it will minimize the impact on the project financing and then the end users as well.
Good. Okay, thanks. I'm clear now. Yeah. So I think, we've got about 10 minutes left, I'm told, by the organisers here. So I just wonder if we can, how would we like to sort of start concluding this session? And, what do you think, the key things are that we've, registered as the critical factors for this debate on, understanding the incomes of the informal sector more? Are there some things that, parties like each of us, I'm talking about Real here and all of you, are there some things that you think we can do to move the market so that we can be sort of market leaders, perhaps, in this debate? Just interested to know what you think there. And actually something we haven't talked about, the role of the cooperatives and the organised informal sector, because I was just thinking, we're not hearing that voice really, perhaps in the ecosystem, we're not necessarily hearing that voice very much. And I wonder perhaps also what we think about organised groups like cooperatives and SACCOs in Kenya and so on. So perhaps let's just take that first before we go further. What is your, James, you're based in Kenya. You know what the SACCOs are. Do you get a sense that the SACCOs are a lobby group, and are they actively promoting affordable housing for their members beyond what they themselves provide through their membership subscriptions?
We don't tap into the SACCOs very much, but from what I can see, they're not. So I've seen SACCOs do housing schemes and do housing schemes quite well, and I think a SACCO with a ready group of people ready to buy and a pool of money that you could potentially subsidise and build out a project on the back of, if they're willing to administer it. I think that's actually a fantastic idea. I think a lot of as there's not that much willingness with SACCOs to they try and do everything themselves as opposed to partnering with people like Fusion. But I think that would be one way of kind of closing the gap between, you know, having the data and the information on people and the ability to lend to them and actually executing some kind of a final purchase document. But I mean, I'd say that this might be for your second half of the question. Actually, this is for the second half of the question. So I'll let other people talk about cooperatives first, and then I'll put across my points.
Okay, gosh, suspense. Right, okay. Sumedha, in India, have you seen the cooperative movement be a sort of lobby group in this, as well as, you know, having the data, you know, to evidence what we're talking about here? How do you see it working? Are there lessons to be drawn?
We have a very large, thriving microfinance market, and there's some very small players. So, you know, they would be the best analogy I can have to SACCOs in terms of savings. And the reason they help is people typically start with small loans, which gives them a little imprint. So then when the big lenders come in, so like, for example, an ABSA comes in, they have some understanding of the customer because there's been some inclusion to a certain extent. So it works. In my personal opinion, any institution which helps you move from informal credit delivery to formal credit delivery is good.
It's a good thing, yeah.
It's always a good mechanism. It's an upgrade. It helps. That's what I think.
Yeah, thank you. Yeah. Prosper, to you, what about the organized informal sector in Ghana? What does that look like?
So the informal sector, really, I would say that there's huge opportunity there for us to support them. We are working with government as well to see how best we can solution the whole market. We are looking at backing the minimum, the lower income segment also. We are leveraging on the pension-backed mortgage schemes to ensure that we are able to use their pension to back the mortgages that we offer to them. That minimizes the risk on the bank as well. What that means is that we are able to get additional security beyond the primary security, which is the property itself, to back these mortgages. And I think it's something that can be adopted across Africa as well, to institute such schemes where we are able to serve this market using their pension to back the mortgages as well. And also because most of them over leveraged, they've borrowed so much and they don't have room in their affordability, we should be able to gross up their other credit facilities with the mortgages and extend it to the full tenor. Doing that, we'll be able to serve this market very well, because as we mentioned, they are minimum income earners and we need to support them in this manner. Yeah.
Thanks, Prosper. James, you had something more to say, and I'm just wondering if it connects with what you've heard, or how does it go? What would you like to say?
Yeah, I mean, this is just a point which I've realized kind of from the discussion we're having here. And you said, you know, what feedback can we give? A lot of the focus currently on, and this conversation was focused around, how do you get people to the point where you can understand them enough to empower them to own homes? But one of the things I'm worried about all of us doing, and it's something, it does fit into our strategy, so I apologize for that, but is we're all focusing on getting people to own their homes. And the big problem we have at the moment is there aren't enough places for people to live that are safe, secure, and well located. So I love that everyone is trying to figure out how to hack this lending to people to get homes. But there's a bigger problem immediately, which we think needs to be focused, and we'd love to be more part of the narrative. A lot of the narrative is about home ownership, but having safe, secure homes people can rent, it seems to have dropped off the narrative, but actually is a much bigger problem and a bigger market. So you asked what feedback would I give? I would say that a bit of focus on improving the rental market, which is stage one, needs to come out of investors, as well as just trying to empower people to own homes, which of course is the eventual goal.
Thank you.
Absolutely.
Thanks. Thanks. Kessia, I can see you're with us, so that's nice. We've just ended on rental markets, and James is absolutely right, of course, that they, realistically speaking, we're just not going to have enough homes for people to own, and what's wrong with secure, decent quality rental accommodation? I guess it's that assets thing, isn't it, though, James? Potentially someone, it doesn't hold an asset if they're renting, but realistically, renting is still going to be a far more immediate solution, isn't it, to our deficit?
Yeah, I think.
Yeah. Kessia, you've got somebody with you coming.
Yeah, I've got Winnie Guitar. She wants to say hello. Oh, James,
Hey,
how are
Winnie,
you?
great to see you. Yeah, I forgot you were going. Yeah, how's things?
So far, so good. I like the fact that James mentioned something about what you need right now, you can actually get, but there's a room for you to grow into something bigger. Therefore, you can expand as you're expanding your income, you're expanding your family. There's a leeway to actually increase or go to a better place. I'm guessing also there's a reverse. It can also happen. You can go downwards.
Yeah, I think that's the great thing about the rental market is upwards and downwards pressure. And, one of the big things we struggle with, sorry, go off topic, back onto the main topic, is, if people is everyone's talking about getting people mortgages and tenant purchase schemes, but what do you do if there's a huge shock like COVID and all of a sudden their equity is wiped out? Like, it's a great thing to aim towards, but it's got huge downside potential. And I think that's another thing we should be talking about, is how do we actually secure people's equity? If we really think this is the way to create wealth in the long run, and I truly believe it is, how do we secure that wealth? Because if COVID taught us anything, it's that it's not secure.
Absolutely.
Yeah, and I really agree with James on that. And I think from the financial aspect, we have to be very clear that we ensure they're not overdebted. Sometimes in this frenzy of excitement of inclusion and getting home ownerships, you don't want to put them in a debt trap. And when there's a pandemic and when things go south, it's just very unfair. So I completely agree. Very sensitive.
Yeah. And I think we just heard Prosper also say something about, people being overextended as well. So yeah, it's a common theme, isn't it? Absolutely. Yeah. Kessia, any final thoughts or conclusions? How do we do? Have we done what we needed to do for you?
Absolutely. It's been such a nice discussion. Really, really interesting and very topical, given what we've been talking about before. The question of affordability and then access, and then what impact does that have on the supply side of what a developer can deliver and what kind of uptake they can expect and so on. I don't think that we've properly tackled the question of rental, and we really need to spend some more time with that. Not you. That wasn't brief, but as a collective, and something to spend some, because in fact the rental and the ownership markets fit together. The key thing for me, and what I was really excited about with this panel, was to really understand the alternative ways of getting a sense of the capacity of the households, and that capacity being very broadly defined. And I think the work that you all are doing is really, really exciting. So thank you so much.
Great. Okay. So we're really happy to wrap up now then, if you guys are going off to lunch there as well. So that's really nice. So thank you very much for inviting us to come on the panel this afternoon. It's been good for us. It's been a really interesting conversation. I would like to say thank you on behalf of AUHF to Sumeda Naik from Syntelect, James McLean from Fusion, and Prosper Akoto from Absa Ghana. Great working with you guys. Great to be part of this conference. So thank you very much. And we look forward to seeing the rest of the presentations and the panels this afternoon. Go and enjoy.
Excellent.